welcome everybody to Hampshire Capital. Hampshire Capital Diversified Real Estate Fund 1. This opportunity will be Trammel Creek, and it's called, really land investment, land entitlement. The land investment opportunity has shown to be a great place for investors to come and diversify through a fund and through investing. First, I want to let our team introduce herself, starting with Shane Carter.
Hey, thanks, Eddie. Hi, everybody. Thanks for spending time with us today. My name's Shane Carter. I'm the CEO of Hampshire Capital. For over 25 years, I've been involved in real estate development, construction, and multifamily assets and management. And my job and role here at the company is really to look for forward-looking opportunities to drive the growth of the business, foster strategic relationships with debt and equity capital providers at an institutional level, and oversee what I call the tone of the organization, the culture of the organization, and really leading by example in terms of what our company looks like and feels like for all of us involved in it. And I'm so proud of the team that we have here, and happy to pass it over to our business partner, Nick Bouquet.
Thank you, Shane. Good afternoon, everybody. Thank you for being here. My name is Nick Bouquet. I've been in commercial real estate, in particular multifamily, for a little over 15 years. And my primary role here is operations and overseeing our investments and acquisitions. And Shane and I have been working together for about 3 years now, and we're excited to present this opportunity to you and talk to you about our fund.
Thanks, Nick. Eddie Austin here. I'll be emceeing this event today. Thank you all for joining us. I'm the Vice President of Operations and Construction, actively managed a little over $180 million commercial real estate investments. Really, for my seat in the company is to oversee, the operations and the construction aspect of the business, because, although we put out business plans, we definitely need people that pay attention to the business plan and how that runs out and how construction plays a huge role in that. I'm proud to be in this seat. Turn it over to Brendan.
Hey guys, nice to meet you all. My name is Brendan. I come from the family office space myself. Recently joined Hampshire Capital and super excited to. I'm in charge of all things kind of investor relations. So any communication regarding, our fund opportunities or project opportunities that are out there, I'm kind of at the helm of answering any of your questions, and, anything related to investor relations, I will be in charge of. So if we haven't yet and you'd like to set up a one-on-one call, feel free to do that. I'm always interested in kind of getting to know each one of our investors or potential investors. So happy to answer any questions anybody has.
Thanks, Brendan. Go ahead, Moise.
Appreciate it, Eddie. My name is Mo LaPointe, VP of Land Acquisitions. Been involved in multiple commercial real estate transactions over the last several years, closing close to about $100 million in value. Currently focused on delivering value creation through our residential projects, just like the one we're going to review today. Allow you guys to learn more about our platform position, and getting excited to have everybody on the call with us today. Appreciate it.
Thanks, boys. Michael?
Yes, my name is Michael Payne. I'm the Vice President of Asset Management. So kind of the opposite of Shane at times. I get to be much more tactical on some things, strategic as well. But from that standpoint, I have been mainly in the multifamily business for about 20 years. I've owned, I've operated, budgeted, done all renovations, gone through 7,000 units worth of apartments, valued at over $1 billion since 2007. And from that standpoint, I've also kind of put myself out into the world of multifamily by being the former president of the Florida Apartment Association, as well as the former director of the Texas Apartment Association. So from that standpoint, what I try to do is make sure that I keep fingers out in everything of what's going on in multifamily, and definitely going through land and what we're looking at on the RV side as well. I feel like we put together a wonderful platform for you to hear what we have going on, and I'm excited to be here today. So thank you very much for joining us.
For those that's joined us, we're going to have a special time towards the end of this. So anyone that stays on during this call, we're going to open it up for open mic, open Q&A. So please stay Our promise to you is to give you education, value that you can take with you anywhere. So please stay tuned to the end. So what makes Hampshire Capital unique? First and foremost, it's our investor first philosophy, a complete alignment and transparency around capital preservation, the risk reduction efforts that we do, the cash flow, the total return, and the tax mitigation. Definitely, we are a neighborhood first mission. We prioritize positive impact on the residents that we serve as the cornerstone for long-term growth. Our team of experts, I say seasoned professionals, dedicates a full circle experience in commercial real estate and alternative investments. All of us have been investors. All of us have a broad range of dynamic education, and it makes us very unique. Talk about our track record for a minute. The principals and partners at Hampshire Capital have over 70 years of collective experience in acquiring, renovating, and operating multifamily apartment properties, commercial properties, and land development activities. Just over 5,600 units transacted, $550 million in value. 320 units transacted in land development and $125 million in value. Common investing fears. I don't know about you, but we always have these common fears and things that just pop up all the time, and we want to identify those on this next slide. Investor questions. What do we hear from investors? Number one, is right now the right time to be investing in real estate? You know, the market says a lot of things in the previous years, and it's definitely been some headwinds for everyone. But at the same time, I think now the education that we gained from that now is the best time to invest in real estate. As we continue to see rental markets stay strong and home prices going up because of low supply, that demand for rental product is always there. And also the affordability when it comes to buying a home. It's a strong rental market. Talking about what we're going to talk about in the later slides definitely speaks to 2024 is the best time to invest in real estate. Why should I invest in a fund versus individual properties? I love this question. You know, oftentimes I'm going to kick it back to a syndication mindset, investing in single properties and talking about putting all your eggs in one basket. Even when you invest in the stock market, you don't allocate all your funds to one sector of a stock market. You're invested in bonds, you're invested in mutual funds, you're invested in endowments, you're invested in many different things than not putting all your eggs in one basket. And that syndication mindset, when you think about if you were going to buy 5,000 units and you're going to do 350, 400 units per property per syndication and buy all those properties, I don't know too many of those that wouldn't have skeletons in the closets. They would have an opportunity to have things that's underlying that could cause problems. You wouldn't want to make single bets on all of those syndications singly. I would put those in 2 or 3 different funds. That way you're diversified. One property goes down, you're able to reap the reward of something else doing just as well or if not better. What question should I ask a fund manager before investing? I would really hone in on this to say there's lots of questions you should ask. I say as a limited partner investing in a fund, you should be being paid to educate. So you want to ask about the deal metrics, about the marketing. You want to ask, what's the experience? How much skin are you putting in the game as the operators, the sponsors? What are you doing to mitigate risk? Are they telling you that the deal could be risky? And how do they answer those questions? Our executive summary here in front of me, we got 3 different buckets that we predominantly invest in. Number 1 being multifamily. It's stable. Apartment communities provide a stable and balanced return from cash flow and appreciation. Your outdoor hospitality provides cash flow. It's an emerging asset class and generates high predictable cash yields. Land development, very exciting. It's a total return model, detailed risk mitigation, and high total returns. Over here on the right, we have our fund metrics. This fund is $50 million in size. We offer a 10% preferred return and a 20 to 28% average annualized return in a 5 to 7 year hold period. I want to also outline the bottom bullet point here. There's no fund level fees. I'll repeat that again. There's no fund level fees. We are not charging our investors any fees in this fund. Most funds are upwards of 5 to 7. I've even seen a common method of a 2%, 2 and 20 model. Those fees can become very hefty. They can charge fees on multiple different sides of the business, and they can fee it to death. We're not charging fees. Alignment of interest with our investors through this fund. Here's our fund structure. Again, no fees charged at the fund level, enhanced returns for larger investments. You'll see down here between a Class A to a Class 4, you'll see the promote split. It's mostly what's changing here. You see the IRR and the AR changing and the EMX. You see that changing, but mostly from A1 to an A4, the biggest difference is how much you invest in the fund changes the metrics of your returns. So the example here on the top right corner is a 5-year projection of 17.2% IRR, 20% average annualized return with a 2x multiple. Benefits of investing in a fund. Again, we're going to dig into this a little bit more. It's a smart balance for stabilized cash flow and high returns. It's exposure to a mix to strong geographic markets. Not only are you investing in one city, you're invested in some cities and in one state, multiple cities inside this fund. So you're able to reap the reward of multiple different geographic markets at the same time. Access to unique asset classes. We have multifamily, outdoor hospitality, and land development. Benefits of tax efficiency and efficient use of investors' time. With this investment, you're going to be able to reap the reward. On the pie chart here on our left, you would have to go out and seek an investment to invest in outdoor hospitality by itself, land by itself, multifamily by itself. We took the work out of it for you. We put it all together here. So multifamily, 65% of the fund is balanced cash flow and appreciation. The outdoor hospitality, again, high cash yield. Land development is your high total return. Shane Carter, if you'd love to talk through the slide for me.
Sure thing, Eddie. Appreciate it. So this is our investment framework. It's really how we go about understanding investments, analyzing investments, getting them through internal review committee, and ultimately proceeding forward. We are extremely disciplined in what we do and how we do it. We first start with the macroeconomics and understand, what is happening at that state level, at that regional level, at that state level, down to the MSA level, and then finally down to the neighborhood level. For example, we invest in Florida and Texas, and they're great places to invest, right? Well, maybe. It depends. It depends really on a number of factors, and we get extremely granular in those factors so that we can ensure that we are targeting the right located assets in the right neighborhoods with the right demographics and the right profiles to be successful. You always want to swim with the large scale macroeconomic trends. You don't want to try to pick a fantastic opportunity in a downward trajectory neighborhood or location. You're going to be fighting the current the entire time. Next, strong partnerships. We really align ourselves only with best in class operators and capital partners, and that ensures safety and stability in our network and in our investments. Risk mitigation. Look, this is paramount because the general partners of this fund have committed 5% of the capital of the fund, approximately $2.5 million of our own monies going in, which is, I think, one of the questions you should ask a fund manager as well is are they investing in their own fund? And so prioritizing preservation of capital is paramount for us. We work really hard for our money, and we want to preserve it. And that's frankly why we believe in this fund model in terms of diversification, which is really the next item. Diversification and risk mitigation are two sides of the same coin for the most part in this fund. And diversifying, like Eddie pointed out earlier in a prior slide, geographical regions, asset classes, et cetera. And what we feel like we've done here is really blend an intelligent mix of the multifamily being a stability component, the high cash yield from RV park, campground, marina, outdoor hospitality assets, and then the unparalleled equity multiple you can get in land development. These three come together to provide a really interesting and compelling blend of diversification for a singular fund investment. Of course, active management. Everything we do is extremely hands-on. We're not kicking back and looking at monthly reports and relying upon third-party property managers. You know, Michael's job, Nick's job, Eddie's job, my job, all of our jobs really is to drill in on a daily, weekly, hourly basis to understand what is exactly happening with this investment. And we are very, very hands-on to the point where any third parties that we work with can get annoyed with us because we're in their business so deeply and we're so active there. And then finally, important to note that we truly do have a people first philosophy here. A lot of people talk about ESG and it's sort of a marketing thing, but we are absolutely committed in how we conduct ourselves to putting our residents and the folks that are either investing or going to be living in the homes and the housing communities that we invest in, that we really are truly thinking about their home and how would we want our home to be if we were them. And that sort of people first philosophy and investor first philosophy, it pervades everything that we do, and it's just a part of our culture and how we conduct ourselves.
Thanks, Shane. Nick, if you'd like to go through the market observation, I don't think there's anyone that can argue that you spend more time underwriting deals than any of us on this team. So please take it away.
Yeah, thank you, Eddie. Yeah, it's been an interesting and a bit frustrating year from an underwriting perspective, but it's part of the business and part of the game. So wanted to talk a little bit about what we're seeing in multifamily and land development, as well as RV, outdoor hospitality. I'm going to start with multifamily first. Multifamily's had a fair amount of short-term headwinds, and we've looked at more than 200 deals this year. Underwritten probably 20% of those, and ultimately not purchased anything yet in the multifamily space. Mostly because we're still seeing a bit of a bid-ask gap between sellers' expectations and what we're willing to pay for a property. Some of the challenges are related to the debt capital markets, which we thankfully got our first rate cut yesterday, 50 bips. So that we'll see how that plays out here over the next quarter and going forward into 25. But we're also seeing we're seeing a bit of softness on the rental side too. So we're actively tracking the data and the MSAs and markets that we're active in, and we're doing that to expound a bit on Shane's point. We're doing that at the sub-market level, and really in general we're seeing a bottoming of the rents. We're seeing that we're really waiting for the momentum on the rent side of the equation to really grow. So we've got a kind of optimistic story to underwrite to and invest in. But we still love the long-term fundamentals of multifamily. And we think we're starting to turn that corner and expect to start seeing some buying opportunities in Q4 of 24 and certainly into 25. So from a deployment of capital perspective, the majority of the fund's capital will be deployed into multifamily. However, we expect that to really happen next year. And in the near term, we are seeing fantastic opportunities in land development and the RV hospitality space. Both of those asset classes are performing well in 24, and I think they're well positioned for investment this year and into next year. And that's where I think, the folks on this call and future investors, they'll see a lot of activity from Hampshire Capital in the land development and RV space through the rest of 24.
Thanks, Nick. I know we've kept you guys waiting long enough. Are you all ready to get in the weeds and really see what this deal looks like? Everybody ready for me to show this?
Let's do it.
Go hand up. Let's go. So first, we're going to keep you one more slide here. Why land? Why development? The big upside managed by seasoned professionals. I'm going to let Shane take this slide away on the right-hand side.
Yeah, absolutely. Thanks, Eddie. So there's a lot of data on these slides, but I'm just going to give you the top level high points. First of all, very high total outsized returns. We are generally seeing 30 to upwards in our track record shown upwards of 50% average annual returns for investments of this kind. But of course, they have no cash on cash metric. They also are seemingly an unstable or risky investment. We'll talk about that here at the end of the slide. But in general, the outsized returns that can be made in this asset class are very unique and very rare. And because of our experience of 2 decades of being in land development, we have the ability to really mitigate the risk, position ourselves well, and capitalize on these opportunities. One of the things that I think is unique in terms of the investment in this fund for this asset class is that there are extremely high barriers to entry. Predominantly speaking, this is not an asset class that an average investor can get into. It's sort of a private club, if you will, where in order to get into the club, you have to have a lot of money to start with to be able to get into land development and development in general. And so the fact that we're opening this up to fund investment, I think, is a really interesting component, and that's why we did it. We've made millions of dollars through the years in development, and now we want to open that up to our investors and allow that to flow through to the fund returns and offer a really unique opportunity that you simply can't get in other places. So we have amazing fundamentals in place here. We have a housing shortage, and it's particularly acute in a number of areas throughout the country. We're seeing some short-term, even this summer, a little bit of supply absorption in very specific markets, not the markets that we're in necessarily in terms of our land development, but we're tracking that closely. In general, the Sun Belt region is going to continue to have a tremendous amount of demand, and we simply can't entitle and develop land fast enough. So we partner with national home builders. We serve them, and what they're telling us is that they'd like to have, an extra 1,000 or 2,000 lots on an annual basis per top 20 U.S. Land development company, but they simply don't have the capacity or the room on their balance sheet or sophisticated enough development partners to be able to deliver those lots to them. So this is a very, very unique place we sit in the ecosystem of development to serve those national home builders. Finally, the diminished risk profile is absolutely critical. I think in a future slide here, maybe the next one, it drills into it a little bit more. But top level, the things that I want to point out here is that in this particular investment, we have the entitlements in place. So there's no zoning risk, there's no entitlement risk. The entitlement process is taken off the table. And we don't take in investor capital, and we don't take on horizontal construction debt until we have a forward contract with an A credit risk counterparty like a national home builder to purchase the finished lots from us. That's how we diminish risk, and we get a deposit from them. So they have skin in the game, and there's a release schedule, and so we're not expending capital in advance of when we're receiving capital. So we balance the entire risk profile really intelligently throughout the entire development process.
Thanks, Shane. All right, without further ado, here we go. Here's the investment introduction. Snapshot. This is 258 residential lots located in Crestview, Florida. 188 townhomes and 70 single-family homes. The acquisition was sourced off-market by Hampshire Capital. It's forward purchase contract, as Shane spoke about, and it's underserved growth market. Crestview is well-positioned to continue to grow, and it's an underserved needed for workforce middle market housing. To reduce the counterparty risk, the forward purchase on contract structure significantly reduces the risk, and this is not a speculative land investment. Many times these land investments, people tie them up with paper, put them under contract, they put a lot of marketing together, and they don't quite have everything laid out. A lot of risk in there that they just haven't done yet. So they don't have forward purchase contracts. They don't have all these things laid out. They don't have them done in phasing. And that makes a lot of risk for anyone to invest in that. Phased acquisitions. The buyer will take down the lots and purchases and stages and various requirements for project to be completed at 100% completion. And the site readiness. The site will be fully entitled and shovel ready upon acquisition. Our investment summary here, you'll see here on the right, we've got we got Tractor Supply, we got McDonald's, we got Waffle House, Burger King. We've got lots of things around here. This building right here on the bottom right corner is a commercial warehouse. We got 34 acres here to play with. This investment summary is $3.2 million. And then our invested equity is just over $2 million. And the project cost is $13 million. The project timeline is 2 years. And then it's a 30% preferred return with a 1.6x multiple. Michael, if you would like to speak a little bit more, let's talk about the surrounding area of this and what's your thoughts on it?
Thanks, Eddie. My thoughts are this. I've invested in land deals, multifamily in my past, and for me, I always look at basically three things whenever I'm interested in a site, and so it's kind of the location. Where is it at? This property is literally within an hour of Destin, Florida. So whenever I see that type of thing, and I know that you've got an area that's attracting people, you've got Elgin Air Force Base within an hour of that area. You've got multiple businesses. You've already got the service industry around it to be able to support people wanting to live there. That's one of the things that for me is a big deal. I like to know what's going on around an area and what would drive it to grow and how would it sustain it. That ties right into my next bullet would be the market. What's going on with the market there? Are other houses being built? Is it being overdeveloped? Is it underdeveloped? What are our partners telling us in the home industry about what they're seeing in the area that we build? All of those type of things are things that I look at whenever I'm sitting there saying, is this? And this team is fantastic at that. Between mow and finding different pieces of land and making sure it has great frontage road, all of those different type of things with Shane and all of his 25 years of development. When it comes from my standpoint of asset management, this one is pretty darn straightforward. And so for me, I look at it and go, wow. And that ties into my third bullet point that I always look for, management. Who's managing it? Do they have experience? How are they managing it? How are they making it where they're minimizing the risk on this type of a land investment? It checks all the boxes for me, and that's why I'll have some money in this one as well. That really sums
Thanks,
it up.
Michael. Drivers on housing demand. Crestview is a great place. It's close to Fort Walton, close to Destin, Florida, 22 miles from Ellington Air Force Base. Got job creation. We got over 6,000 plus jobs, 4,000 additional jobs coming in the next few years. 7 miles from the Shoals River. It's got 10,500 acres there of industrial and logistic development projects going on. Tons of job creation. Also, I want to point out, you see I-10, major highway running east and west. That Crestview Road running through there, that blue line, they just put in a spur to actually put in an on-ramp and an off-ramp right here on that road going to this particular property. So it drives a lot of economic drivers to bring in more of your national chain restaurants and things like that. Also, the rising housing costs in the coastal areas of the Panhandle, coupled with increasing jobs and the population growth, will continue to position Crestview as an affordable housing option for families and individuals seeking homeownership in areas. We'll let Mo speak next because Mo's got a lot of experience here in this market and he's got some really good stuff to share with you. Go ahead, Mo.
Appreciate it. And again, thanks again, Eddie, and everyone else that's with us on this call this afternoon. So when we think about land development, we do see that through the lens of delivering locally based residential solutions, kind of value creation and collaboration. And Shane alluded to risk mitigation. And when we think about risk mitigation, one of those components is, what's the appetite for collaboration from the local municipality? And, they've been very welcoming in terms of bringing us along through the entitlement process. And I think as investors, that shouldn't be appreciated in how we look at things, right? So specific to this market, in addition to delivering potential housing for the needs of the Air Force airmen, right, that Eddie alluded to from Elgin Air Force Base, not too far behind, we do see downward housing pressure for attainable housing, right, kind of away from the coastal areas. And so we wanted to dig into that and reach out to the Housing Authority and appreciate, what does that mean from a local perspective, right? And we come to learn that, there's a wait list of over 300 families looking to continue to capture that market. And when we drill further, looking at, how are they kind of working through that process, we appreciated that there's a voucher program that was really several $100s higher for what we looked at some of our same performer product, right? So when you put all that together, we found that, okay, there's a unique opportunity to really deliver quality-based housing in this market along the Panhandle.
Thanks, Mo. So we got here our sources and uses. We got our construction loan. See, we're 85% leverage here, $11 million. And equity, we've got a little over $2 million. That's $13 million in total. And then down here on the bottom, we have our uses. So we got our land acquisition, a $3.2 million, our acquisition closing costs, our soft costs, our construction costs, and then financial costs, and always a contingency budget. It's in here. Another thing you noticed on our right, many of these deals that we've seen go across finish lines and some not go across finish lines is due to floating debt. This is a fixed rate debt model. So this construction loan is 85% loan to cost, and it's fixed at 14.5. Good possibility that because of our recent high five with the Fed to be able to reduce by 50 basis points is going to help us tremendously as well. Origination fee at 1.5%, 24 months on the term, and it's 24 months interest only. Time for Q&A, but before we kick that off, I want to hear from Brendan on what is the most common question that you get after reviewing a deck like this from an investor standpoint.
Yeah. Thanks, Eddie. Yeah, I mean, over the years, I've spoken to, many retail investors and institutional investors as well. And I think prior to seeing, some material and stuff, and, once they see that, digest everything, one of the most common questions I get back is like, what's your guys' track record doing this, right? Like, what is it that you guys have been doing for the past few years, and have you seen success doing this, or is this your first time trying, right? And I think that's, part of the vetting process, if you will, from an investor standpoint, is making sure that, we can, walk the walk, right? Not just talk the talk. And as we saw on this deck, I mean, Shane's been in the game for a very long time with land development in particular. And I mean, he's been able to achieve, upwards of 60% AAR over the last, 20 plus years. And that's, those are incredible numbers. And obviously these are great projections, but at the end of the day, returns in the past is really what speaks for the future. And I think a lot of investors get that. And one other thing that I guess I'll add is a lot of investors want to know at the end, are you putting your own money into this project, right? And how much do you believe in it? Because I think we all saw it a lot with some syndicators and stuff. And like, during the COVID, post-COVID, a lot of these projects and stuff were going south, and a lot of people had to try and get deals across the finish line, right? They have bills to pay. And a lot of them weren't putting any money in their deals because they didn't believe in it. They were just there to collect a fee. And I think that's the number one thing, to check right off the bat for an investor is, do they really believe in this project, or are they just here to collect the fee? And as you can see here, I mean, we're putting a significant amount of our own personal money into this project, which is a huge thing for an investors to kind of be able to sleep at night knowing we're hand in hand with our investors. And it's something that we're definitely proud to say that we're doing.
Thanks, Brendan. Brendan, if you wouldn't mind, anybody that wants to go direct to investment, we're going to go ahead and drop that in the chat. You can jump right into it. First, I'd like to open it up for Q&A. Ryan, if you wouldn't mind, tell us from other webinars that you've attended, what is a way that we could do any better with what we're doing here?
I think I relayed to Shane yesterday. You guys are, it's definitely the clarification and simplicity of the deal makes it interesting and easy to understand and compute. With less moving parts is always better. This is something that my investors have interest in for land development. It's a little different from a lot of the opportunities you see out there that Shane mentioned. So we're excited to put some people in front of that. The preferred rate of return that you're offering in it is obviously very attractive as well too. So just clarification on that is always helpful. But aside from that, I think it's very polished and very simple to follow and understand, at least from my perspective.
Thanks, Ryan. Is there anyone else that would like to open up for questions? Anything you want to ask? This is our promise to you to take value away from this, and that value being education. We've got a large panel of people here, as you can see on the screen. We're happy to answer any question you want to throw at us. Tom, do you have any questions? Shane, is there any closing statements that you want to add before we jump?
That I sincerely appreciate everybody joining with us and taking a look at the project and proposals. Happy to talk one-on-one with anyone on the call. That would be either myself or Brendan. Always happy to talk with our investors, answer questions one-on-one. If this sort of open format for Q&A isn't comfortable, we're happy to chat with folks offline at any time. And really appreciate everybody spending time with us here.
I'll chime in real quick. One other thing for clarification, and maybe it's something you don't want to disclose, but the off-taker for the land development deals, as far as, obviously we mentioned, large national development groups. We know several of them. Is there a specific one that you can speak to that's looking to do that, the Crestview or the upcoming ones?
Yeah, we have a strategic relationship with D.R. Horton where we have a number of projects in the development pipeline with them. However, we also have strong relationships with Century Communities or Century Complete, which is a part of Century Communities, Lennar, and Pulte as well. So those are the ones that we currently have active relationships with in our pipeline, and we expect to continue to add to that as the weeks and months go by, and as Moise continues to work his magic out there in the world.
Fantastic. Thank you.
Ryan, there's also been several groups that approached us, like Roush Coleman, that we've had open discussions with. What we found is there's a tremendous amount of people that they need Class Act operators and people that know how to do this entitlement process and make it smooth and deliver them with projects that they can deliver as well, because they're home builders. They need a supply chain as well, and they see us as a huge benefit of a Class Act company that can deliver those units to them. So not only is it D.R. Horton and Century Communities, there's other groups that's kind of caught wind, and we're having conversations with them as well.
Eddie, I throw out one thing with regard to multifamily from the standpoint of anybody online. If you don't feel like asking any questions on multifamily here, by all means, reach out to myself or Nick, and I know we'd be more than happy to go through anything you might have questions on. If you're looking at, you're already invested in one and you've got concerns over something at a different place, by all means, it's an open table.
Thanks, Michael. Hey, anyone that wants to jump in and help us out with this housing shortage, we're extremely passionate about it, as you can see. If there's anything else we can answer for you, please feel free to reach out to any one of us. We're here to help, and we hope to see you make your commitment and investing to help us change the housing shortage and give beautiful residence to other people. Have a great day, everyone.
Thanks, everybody.
Thanks, everyone.